Good morning, Steve Reed in Chicago with the morning grain comments. Well, hope everybody has a good weekend. Sure has been an interesting week with the U-turn by Russia as far as Ukraine vessels moving in and out for grain shipments. The problem number one is that neither Russia nor Ukraine has confirmed yet that they will see the corridor deal extended after the November 19th deadline. Also, seems like Turkey and Russia is making a list of countries that need Russia grain and fertilizer exports. And we also note that while insurance companies are offering freight for Ukraine vessels, they have priced them so high that probably people haven't bought any. Just kind of see, I saw some increase in escalation of war activity, both on the Russian and Ukraine side, but especially Russia continuing to bomb key Ukraine infrastructure and electrical places. We also noted that the large Ukraine nuclear power plant was shut down yesterday because of shelling and is now being run on generators. So that's another concern that we have to look at. We continue to see North Korea escalate missile shipments, firing over parts of South Korea, and some missiles were even fired over Japan. So continued escalation of global tensions offers uncertainty to the marketplaces. Overnight, we saw the Chinese and Hong Kong equity markets up sharply. There's social media talk that China may relax part of its strict COVID restrictions. And so that's something that is providing support to all markets. David Hightower has always said, higher tide lifts all boats. And so most commodities are higher, the dollar is lower, and we'll see if that has any impact. One problem is that this week's bean export sales were lower than the previous week, and that it might be the trend down the road. Also, yesterday, China bought 500,000 tons of corn for Dec and March out of Brazil, and they announced several countries in Brazil, companies in Brazil that could ship corn to China. And that may not be an impact until June or July when Brazil's corn harvest begins. But it does suggest that Brazil could be more aggressive and lower our exports demand. We also note at the same time, Mexico has a zero tolerance for GMO imports. And so U.S. and Mexico is trying to define what that means, if that includes just food or also feed corn. Technically, markets have tested resistance over the last few weeks, then it tested support, continuing mostly in a trading range. Funds, I don't think, are real aggressive buyers of grains. Farmers should sell on rallies. End users should buy on breaks. Next week, we've got the November 8th midterm election, and we also have November 9th USDA report. Average trade guesses for the crop and carryouts show minimum changes from October, but USDA always has some excitement on those reports. Have a good trading day.